Welcome back, guys. I'm going to run through some stock charts, give you guys the morning read on the tape, and let's get right into it. All right, so Nasdaq Futures. Here's what I see. We got the small uptrend line, a little bit of a break, wasn't impulsive, and now we're back testing. So if we fail here, then that's going to hold. This will be resistance, and we'll start to roll over. We'll probably make our way down to the major trend line of this rally that we've been in since, really March or really April is when this trend got set into play. So watch for that. If we start to roll over, look for us to run down to the bottom of the rally. ES futures, kind of selling off. Nothing crazy. I don't see anything bearish. The trend ultimately continues in the SPY. It's really just the Nasdaq. We have this tiny trend line, kind of a minor trend line that was broken, that maybe it's going to hold. Maybe we go sideways to down. We have to wait and see. One thing I think it's important to take a look at. Here's the S&P 500 up, pretty much flat, 0.7%. It's morning, but we're basically flat. Look at the RSP, which is the equal weighted S&P 500. It takes out the heavily weighted FANG stocks, down 0.3%. So again, we're seeing broader market deterioration, even though the FANGs are essentially keeping the market held up, and the broader market selling off. So that's a sign of market breadth deterioration continuing. That trend looks to be continuing. So if that ultimately what you would expect to see is if that trend continues, you'll eventually get a break or a snap of the leaders, and then there will be no strength under the market because the market will have already deteriorated and the FANGs or a single sector have held up the strength. And then if that strength breaks, there's no strength left in the market. So something to watch for. Here's the Qs. Continue to grind higher, basically just moving higher. Volatility, though, let's look at this, UVXY. So this is not what I want to see, and I suspect they're going to fade it, but it's starting to show signs that people are looking at buying volatility. So here's the daily chart of this UVIX, and you can see the wick right here. They popped it above this bullish falling wedge. They popped it up, and then they faded it and closed it back below. So it looks like a whipsaw. I'm not sure if volatility is quite ready to pop. Maybe we're going to get another move down to the bottom of the wedge before we actually break out. But it's starting. We're starting to see people paying attention, looking for breakouts of volatility. Doesn't look like this is going to be it. Although it could. If today or all of a sudden we get some sort of big sell-off and volatility rips higher, then this would be the breakout of that bullish falling wedge. So that will come most likely with a breakdown or a sell-off in the stock market. Okay, so dollar, very important. A lot of people say you get the dollar right, you get everything else right. And I think that's very true because pretty much everything's priced in dollars. So dollar looks like it fell down to resistance, is holding that holding that support and continuing to move higher in this upward channel. So I think it's still in play. Everything looks still intact and technically sound that it's going to still make a move up to this 95. So that's what it continues to look like it wants to do. Here's gold. And gold's kind of doing the opposite, breaking down. Gold is breaking below. So again, gold looks like it's heading down to this 1790 level. I've got that marked out. If anybody wants to know where I get that from the weekly chart here, and that comes all the way back from the 2011-2013 resistance area, 1790. So we broke out to the upside impulsively, with gold went parabolic, and now you get the correction back to the bull market support line. So I'm looking at 1790 as the next target. How am I trading that? Well, I'm short Barrick Gold, down 2.45% today. Let me go to the hourly. So this continues to work. I got short Barrick Gold right here, basically. I pointed that out in my video yesterday, but basically the day after the Warren Buffett pump, I got short. And so that's that's how technical analysis will work in your favor. Is a lot of people are just afraid to short something because the headline Warren Buffett is in the trade, but that doesn't mean that the price that it's currently trading at doesn't give an opportunity to move down. Warren Buffett's a long-term investor. He's going to be buying a position and building a position. He doesn't care about a 10, 15% move to the downside or the upside. He's building positions and he'll hold that. He thinks in the next 5 years, this will be doing a lot better. And and I would agree with him, but 5 years is a long way off and we got short here. So far that trade is profitable, about 5.5%. I'm looking for a move below the lows right here, somewhere down around, it could stop at 24.75, 22.60, or possibly down to 20, about 20.50 or so. So we'll watch that. I take profit as I start hitting price levels on the way down. I start locking in profit. And then also I'm short the silver miner PAAS. And looking good. I adjusted this price target down to 25.75. That really is actually a little bit more of an accurate level. However, you might want to step in early. Whenever you're getting down to a profit target, you usually want to step in early and take profit a little bit before you hit a level. When everyone's looking at a level, you're going to either stop short or overshoot. Better to take profit early and lock that in if you've got a nice trade, then wait for, look for an overshoot or something like that. So this trade shorted this up around here. We're profitable about 16% on that. Looking good. Someone wanted me to point out SLV. So here's GLD. GLD is right at trend line support right now. You can see this is going back to the March lows. Nice clean uptrend. Here's GLD right here, just starting to break below it, not impulsive. So we'll watch to see if the selling picks up and it gets impulsive, then that would be a clean breakdown, or it might hold here. Here's SLV. Someone wanted me to point this out. I don't track SLV a lot because I prefer to trade gold and gold miners, and silver miners as well. But here's SLV here. Basically, SLV is not my favorite ETF to track because it'll do what gold does. And so usually what you can do is use gold as your barometer. Maybe you've got an asymmetrical wedge here or a triangle, and we're starting to break to the downside. Ultimately, I think that SLV, I think we get down to this 2140. That's a pretty logical area. We could go, we got some gaps down here as well. So you can see there's a gap. This is actually a gap that was not filled. But right here's the more obvious gap. So we've got a gap here at 1986 and a gap here at 1860. So I could easily see us, running down and filling one or both of these gaps. And then that would probably be the end of the move. I'll definitely be looking at, buying, some miners or loading back into the gold and precious metal trade when we start to hit some of these supports. IWM, so I am short this one as well. Continuing to look good. This is your resistance right here, 156.25. We popped it today, failed it, closed back below. So you can see this held as support here, held support here. Pretty much held support right here. Then it was resistance here, resistance here, and again resistance today. So it's holding as a key pivot level. So as long as it is not breaking above that and holding above it and failing as soon as it's above that, that's looking good. It sets us up for a continuation to the downside. I'm looking at 145.42 is kind of the next level of support. Here's a trade idea, LPX. Nice, you've got this uptrend here. Nice uptrend in LPX. This is a low float. Well, I don't know if it's low float, but it doesn't seem to be trading a whole lot on my trading platform. But uptrend, and we just broke it the other day. You could see the breakdown. This looks like a back test or a fake recovery. They kind of recovered the support line, but it instantly sold off. And now we're getting a nice impulsive candle down. with a little bit of follow through. So I think this looks good for a breakdown. Now we could back test, run up and do a back test, and that would be objective areas to add to the trade. So I like this one. DocuSign's looking kind of interesting. Let me go to the daily here on DocuSign. Nice uptrend here in Docu. Potential for an inverse head and shoulders. Here's a shoulder. Here's the head. Here's the shoulder there. So the neckline looks about 189.50. Nice impulsive breakdown of 189.50 would be a break of the neckline, and that would set us up for further momentum to the downside. Here's XLV. I pointed this out the other day. We broke this trend line right here. Not impulsive though, and so we're just consolidating sideways. So this could gap up or break up and do a back test or break down. I'd put odds that it breaks down and runs down and does a test of, let me get rid of this tool, of this support here at 97. I think we're going to get another test of that 97 level. XLF here, you can see here, well, watch this one. Today might be telling. So this is the one that they really need to recover. If they want to keep the rally intact, they need to save XLF. So here's your uptrend that XLF has been in, and we've broken down from that trend line support. We're doing a back test. Basically today it opened at a back test and sold off. So if they can't, into the day get a stick save or some sort of recovery job where they're able to pop it back up above support and get it back in this area, then probably a successful back test, and we're going to head lower. And that will be, that is a sign that you want to take note of, that XLF is breaking down. It's giving you an indication of further things to come potentially in other sectors. And we'll look at the tech sector again. XLK, this is tech minus Amazon. So uptrend line, nothing bullish, nothing broken. This is the strength in the market. This is what's keeping the market, looking, moving higher basically, and hiding a lot of the weakness in the other sectors and the general market in a whole. So when this breaks, the market's going to break. This won't break until Apple. And we'll go through some of these fangs real quick. Here's Apple. I got this uptrend line right here. You can see it created this price channel, and then it moved to the downside of the price channel and then moved to the upside of the price channel. And we've just been moving on top of the price channel now. So, really a break down to the lower end. I'd want to see it break down into the price channel and then really break the lower end. That's going to be a breakdown of Apple. Until then, this is continuing, it's bullish. Microsoft started to break down. It's going sideways basically. So here you're going back to May. You've got this little uptrend line here. We could probably draw something out, from the lows, maybe something like this. It may be here, but we'll give it the benefit of the doubt and just put it right about there, and say right about there. So let's say a breakdown of this trend line, then it would that would be a breakdown in Microsoft. Amazon, nice clean uptrend right here. Lots of reactions, so well verified trend line here. So you need to see a breakdown of this trend line. Until then, it's holding strength. Google looks like it's just going parabolic almost at this point. Google was the weak one, and I'm noticing like a lot of the weak FANG stocks, they'll be weak, and then there's just rotation. People they'll be buying the FANGs, then they'll stop, buying Apple, and then they'll go buy the weak one, and they just keep rotating in and out of different stocks, and so that continues. And if that's happening in the FANGs, nobody's selling the FANGs. They'll rotate into the weak ones. And then they won't sell off the things necessarily. They'll just go flat. And that's what's keeping the market propped up, is these mega cap, stocks that are heavily weighted in the S&P 500 and the triple Qs. And so Google, moving higher, nothing really bearish on this one. You do have, you could say that it's somewhere right in here. Let's go to the hourly. You know, it broke down there. I've got a reaction here, and lots of reactions below, but they recovered it. So we'll just move it down there since they did recover it, and maybe something like that. So we're capturing a reaction here, didn't quite get there, and then several reactions right in here. So breakdown of that, and that would be bearish. So again, you got to see a breakdown of these fangs in order for the market to break down. Tesla here. Tesla is definitely going to be a good short at some point in time, and I'm looking for it. I don't see it yet. I don't see signs that it's there yet. There's no impulsive shakeout move. What you want to see is the trap. You want to see the bull trap. You want to see the bulls wake up one morning to a 20% down day, or some sort of trap that just traps in all the bullish money that has been late to the party. Until you see that, there's too much opportunity. If there's a sell-off, these little sell-offs, you give the bulls an easy exit, and that's not how bear breaks work. When sell-offs come, you got to trap those bulls in so that they panic sell and just are scrambling, and it's an emotional move. So if you're just selling off during regular market hours and it's just kind of heading down, the bulls can just exit with their profit. And that's not how these breakdowns work. So still looking for that, not seeing it yet. So Tesla's still bullish in general. Let's look at PayPal. I pointed this one out. So this one's just grinding below this resistance that it broke. So if I zoom out, here is your March lows. The trend line's not my favorite because I've got a breakdown here. This is the March lows here, breakdown here. It's just not. But if I move it to here, I could move it to like right there. That's actually a little bit better of a lineup now that I actually look at it. But it still comes in the same spot up here for the most part, so no big deal there. But, we broke that trend line. We did a back test right here on the hourly. Looks like we're trying to do another back test. Maybe we'll just go sideways. But trend's broken, so, now you look for opportunities to add or build short positions at resistance. KHC here. This is KHC. This thing's just sideways. It's consolidating. If I move to a daily, this could be flagging. The flag's gotten pretty long, so I don't see a real clean bull flag on this one now. We're consolidating right below this gap. Big gap right here sitting at 36. And it's consolidating. It looks like it's building energy to break above the gap and fill the gap. That's what it looks like to me. Now, that doesn't mean we could easily come down and tag support right here around 33.50. To me, that seems like the spot to buy this thing. And you could buy it there or on a break, obviously, into the gap. They could start to break into the gap and run up into a gap fill over the days, weeks, months. I don't know how long it'll take. So levels to look at when we start, when or if it starts to fill the gap, about 42, and then about right around 48. Now again, don't wait for the last penny. If you're looking to take profit, take it a little bit early. That's my opinion there. And we'll close with the bond market. Very important to always look at the bond market. Bond market's 10 times larger than the stock market. That's where the professionals play. Most retail traders, investors don't own bonds. They might own an ETF, which is a stock, essentially. That is a grouping of bonds, but they don't actually own bonds themselves. I was buying bonds a little while ago. Actually, I was buying T-bills, 4-week T-bills on Treasury Direct as a way to just kind of hold some cash as I was looking for a market sell-off. And that was prior to March, basically, February and March. But no longer own those because there's just literally no yield on those. However, you can look at this to give you an idea of what's going on in bonds. And bonds gap down, and we're selling a little bit today. So interest rates are rising. Interest rates rising is, can be good for the banks. I mean, it should be good for the banks. But it's bearish for gold in the short term and bearish for the stock market. Now, You just have to understand how that might play out if that plays out. You know, if the stock market sells off, the Fed might come in with more QE, dropping interest rates even lower, buying a bunch of bonds. Bonds go higher, yields go down, gold goes up. That doesn't mean that's what's going to play out, you know, instantly. You might get the sell-off in gold first, then gold goes up after we get some Fed action. But that's what it looks like is happening right now. So looks like there's a sell-off coming in the stock market. Looks like gold's going to sell off, dollar's moving higher, and the Fed's going to have to step in again. But until you see tech break, the market's not going to break, and you know, there's no short on triple Qs or SPY. IWM looks like a good short to me as of right now, but there's no short on the broader market until tech breaks. That's all I got. Hope you guys enjoyed it. Let me know if you find some value. Leave me a thumbs up or a comment. I appreciate it. Catch you guys on the next one.